Hello viewers, we'll be going over WTI crude oil. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for WTI crude oil. So back to the technical analysis, we're currently down 6% on the 1 hour chart. We have breached the 200 moving average and we are currently oversold on the 1 hour RSI. If we extend out to the 4 hour chart, we have seen a divergence overnight and we have not reached oversold RSI. And if we extend out to the daily chart, at the moment we're currently resting on the 18-day moving average, this purple line. If we do proceed to break that level, we could see a possible support level being the 100-day moving average, this orange line, and that price is around $32.95. So that will be our first immediate support. If we were to, say, climb higher and reverse higher, the next resistance will be the 200-day moving average, which is this green line, and that is at the price of $45.20. And if we were to move up higher to hit that 200-day moving average, that price movement to the upside is roughly around 18.7%, and to hit support level, that price movement to the downside is roughly around 12.2%. So now let's examine the day-by-day probability model. And again, these models are now available in the link below. So do check it out. So as we progress to the 7th day, we have a 33% chance for WTI crude oil to climb between 0 to 3.7%. And to extreme case to the upside, we have 11% between 37 or 3.7% to 7.4%. And to the downside, we have a 44% chance for WTI crude oil to fall between 0 to negative 3.7%. And to the extreme case to the downside, we have 11% chance for WTI crude oil to fall between negative 3.7% to negative 7.4%. So now let's examine the day-by-day forecast for WTI crude oil. So we have 1 day out, that will be a Thursday, and 2 days out will be a Friday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and overlapping it happens to be the best match. So right here we have our current trend, and the line and the trend below is a trend that we found on the line graph. And this trend dates back to January 21st to April 17th, 2009. So let's begin comparing both trends. So on the current trend, we start off at the middle Bollinger Band, proceeded to touch the bottom band, revert back to the mean to touch the middle band, and towards the last half, we see it average above the middle Bollinger Band. So now in the trend in question, we also start off at the middle Bollinger Band, proceeded to touch the bottom band, and then revert back to the mean to the middle Bollinger Band, and the last half we see average above the middle Bollinger Band. So what we have here is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe if the trends and patterns are somewhat the same, the outcome and forecast should be fairly same. So the model that we just examined was January 21st to April 17, 2009. Back then, WTI crude oil was down roughly around 7%. If we head back to the day-by-day probability model, that coincides with the standard deviation of 11% between negative 3.7% to negative 7.4%. So now let's examine closer on the technical performance of each model. On the current trend that we're in, we're currently down 5% from monthly high, up 33% from monthly low, down 57 basis points from 10 simple moving average, down up 50 basis points from 28-day simple moving average, and up 13% from 50-day simple moving average. So now we compare it to the trend that we just found. Back then, WTI crude oil was down 3.5% from monthly high, up 21% from monthly low, down 79 basis points from 10 simple moving average, down 45 basis points from 20-day simple moving average, and up 7% from 50-day simple moving average. So among the two trends, there are technical differences. One is in the 20-day simple moving average. Back then, WTI crude oil was down 45 basis points. Compare that to the current trend we're in, we're up 50 basis points. So do keep that in mind. Again, these models are now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.